and understanding that stability is the new opportunity. The biggest question I get is always about interest rates. And while that is important, everybody's waiting around for the perfect, let's just call it, rate drop. And I hate to break it to you, but in 2026, it's likely going to be the year of stability, not these extremes. 2021, we saw interest rates below 3%. This past 6 months, we saw rates as high as 7.5%. Huge swing back and forth, and there's so much news about this, which is why it's always one of the top questions I get. But again, 2026, I see this next year, this next 12 months, as really being a year of stability, not extremes. So a lot of the economists and experts that I follow, they're predicting that by the end of 2026, we'll probably see our rates being somewhere in the mid to upper 5s, maybe the low 6% range. So that's not this record low that we saw from 5 years ago, and it's also not the really high numbers we've seen just more recently, but it's going to be back in a more normal, stable level. And what I love about this is when rates stabilize, buyers, they can finally start planning again. Predictability, that's what brings confidence, not just for buyers, but also for sellers. We've already started to see lenders rolling out new creative programs, and a lot of the new construction home builders, they're also offering some of these buy downs, these rate locks, and sometimes even closing incentives just to keep their inventory moving. These are all signs that things are starting to stabilize, which I love to see. So if you're wondering if now is the best time to buy, well, there's more to it than just yes or no. If you've been waiting for a calm, predictable market, then yes, this could be a great time to buy. But if you're waiting for 3% rates again, unfortunately, you're gonna be waiting for a really long time, in my opinion. I don't like this saying, but a lot of people talk about marry the house, date the rate. And what that means is just finding a great home that you're going to be very happy with for a long period of time and marrying the home, but then maybe getting it at a little bit higher interest rate initially. And you can date the rate, meaning that maybe in a couple years from now, if the rates have significantly gone down, you can refinance at that point and lock in a lower rate. So, there always are options out there like this. So I think what's most important is just getting in the game. There's lots of different ways to do the math behind it, but if you're paying a certain amount in monthly rent versus putting that towards building up equity in your home by buying a home, it really doesn't take long to kind of do some analyzing and realize that most times you're still better off buying even if it is at a higher interest rate. But I always want to preface that with saying that the most important thing is buying when it makes the most sense for you and you're confident and comfortable with whatever that monthly amount is that you're going to need to start being able to budget for. So if that's the biggest thing, is whether it be 2026 or 2030, it's always going to come down to when it makes the most sense for you. Now, another thing that also is really, really important to understand is that inventory levels are finally starting to become a more balanced market. You may have heard a lot of news recently about how it's been a very strong buyer's market recently, which is actually the first time this has happened in Denver in over a decade. What this means is that there is a lot more leverage that buyers have over sellers. There's a lot of homes for sale right now, but there really aren't that many qualified active buyers. So the ones that are out there, the buyers that are out there and are seriously actively looking, these are the ones that have the most leverage. Since you have more inventory to choose from, you can really be a bit more picky. You can hopefully negotiate a bit more on the sales price of the home, or maybe getting some of the closing costs to be paid for by the seller. There's just a lot more leverage that buyers have right now in Denver, and that's going to continue, I think, at least going into 2026. So a long-winded way of just saying that this balance is super important and is actually really favorable for almost everybody involved, both buyers and sellers. These buyers, they're continuing to have more choices, but sellers, they are also now having to compete on value, not just availability. So as a buyer, you can start to negotiate inspection items again, maybe ask for the seller credits at closing like I just mentioned. You just have a little bit more leverage, and that's something that we have not seen in several years, so it's a really good time to be a buyer. But coming at it from a different angle, from a seller's perspective, we're not seeing this crash that a lot of people were expecting, and it's really more of a correction in my opinion. Prices, they have flattened out a bit, but they haven't fallen off a cliff, and really that's that stability that I'm talking about from both sides. I saw a statistic recently that said only about 25% of homes had sold for above asking price. So almost every home in Denver right now that's been selling has been selling at a below asking price, meaning that there's been leverage by the buyers to get the price reduced, as well as getting some of these other concessions and seller credits. So it's just exciting. It's exciting to see Denver kind of turning around a little bit again and just more activity as we go into 2026. It's going to be a good year, and I'm really, really confident and optimistic about that, and hope you guys are too.